This video was produced by Pipeline Knowledge LLC. My name is Tom Miesner. The background or the context for this video is my friends at Rosen asked me to do a little tutorial or webinar on current topics, and this one was something that's going on right now, obviously COVID-19 and the drop in energy prices. Two things happening at the same time. They've asked me to make some comments on those two topics. So let me introduce myself a little bit first. I want to talk about Pipeline Knowledge LLC. We're a training provider. So we teach classes, either instructor-led classes, in-house. We have WebEx classes, and we also have a series of video lessons. Right now, the ones we have out are our Hazardous Liquids Control Room training class. There are 10 lessons together in a class, and they're currently in use by 7 major oil pipeline operators in the U.S. So that's one of the things we do. I'm also an author. I've written a book about transmission pipelines, oil and gas pipelines in non-technical language. It came out in 2006, the second edition. Just today, I got the second proof of the second edition. What that means is it's at the publishers and it's going to be out in a couple of months, weeks, I don't know, depends on how long it takes them. This second edition, because I've taught over 150 classes since the first edition, is going to have a lot more art in it. I've been challenged to be able to explain things in simpler terms. And also, the publisher has agreed to have the pictures and art in color. So it's going to be a super book, I think. I have about 25 years at Conoco Pipeline, and that was primarily in engineering and operations, and then strategy and business development, and I ran the pipeline company for about 7 years before we merged with Phillips. So that was about 15 years ago, a little more than that actually now, and since that time I have been consulting to the oil and gas pipeline industry stakeholders and doing training. So that's the genesis of this. I mentioned the pipeline book. There's a picture of it. I also wrote a book about the little pipelines, the natural gas distribution pipelines. Came out a couple of years ago, so a very good book as well. The way we're going to approach this is Rosen has given me 6 questions that they'd like for me to talk about, so I'm going to go through and discuss those. First one, what would a pipeline operator's main focus be now with restrictions caused by coronavirus and the low energy demand? So 2 things going on at one time. Do pipeline operators have crisis management plans, or do they need to be reactionary? We haven't seen any problems with energy supply. Do we expect energy demand to increase as restrictions are lifted? And what will pipeline operators be doing to protect the supply? In Europe, they say they're seeing drops in energy demand, and we're seeing that in the U.S. as well. Okay, people are locking down. They aren't traveling as much, aren't flying as much, so we've seen a drop. How do pipeline companies in the transmission business make a profit when demand is low and the price of gas has been low for years? And they have observed it seems like this drop in demand is affecting gas companies. I believe they mean natural gas companies the most. I'm not sure I agree with that, but I'll talk a little bit about it. And then non-essential maintenance work is being suspended. How do pipeline operators balance supply and maintenance? And then finally, the low oil pricing can have an effect on the budgets of the majors. And so what changes do I see in our industry after the crisis is over? So those are the topics that I'm going to talk about, and I hope you find it interesting. Let's get on to the first one. Okay, so the operator's main focus right now in light of coronavirus and the low energy prices, both of them happening at the same time, having a little different impact on things. So let's talk a little bit about energy prices first. Energy prices, when the price of oil and everything else has gone down, then that will affect the new oil we're looking for. Now that thing, the drop in energy prices by itself, actually will stimulate demand a little bit. So we should see overall demand pick up if we were just looking at the drop in energy prices. And the effect on the pipeline companies then, because the pipeline companies move the oil and get paid for moving oil, and natural gas and gasoline and liquefied natural gas liquids and all that sort of thing, they should actually be making a little bit more money depending upon where they are in that hierarchy, if you will. So we have kind of gatherers and processors, and this is kind of bigger on the natural gas side of things, and they're looking for new gas to come in, hook up, gather, and all that sort of thing. So whenever energy prices drop, generally the gathering and processing people are the most affected, the most immediately. If demand continued or had continued on, then the long-haul transportation companies in aggregate should continue to do just fine from a profitability, from an earnings standpoint. Now, the fly in the ointment we've got with this from a pipeline perspective is that COVID, because places are locking down and the demand is going down, the pipeline companies are moving less oil. So they are going to be affected in that way. But with those in perspective, the focus of the pipeline companies is not going to be any different in this situation than in any other situation. Their primary focus is going to be safety, both public and employee safety, reliability, moving the stuff, and efficiency and environmental performance. So they're going to still have the same focus, I believe, in light of these two things that are going on. Now, it is going to affect profitability, at least in the aggregate, I believe, because in most places, the price is regulated, so they can't respond to the market lowering it or raising it. So we're going to have less movements and the same rate, so there's generally going to be a decline in the earnings or profitability of the pipeline companies. Now, pipeline companies are very capital intensive and generally have a high fixed cost and a relatively low variable cost unless they get really, really full. So any erosion in the volume is very quickly going to go to the bottom line, and we'll see that in reduced profitability. So crisis management plans, yes, they definitely have crisis management plans in place. Now, they probably don't have a contingency plan or a crisis plan for something like COVID-19, which is hugely unprecedented, but they do have crisis management plans. Pipeline companies will have emergency response centers. When I was at Conoco, depending upon the level of what happened, and a lot of those responses, of course, were to leaks or weather events and those sorts of things. Depending upon the severity of the crisis, we might respond at a local level, at a regional level, or all the way up to basically the U.S. level. And so we did have a dedicated room set up with the proper communication equipment, with resources and manuals and that sort of thing we could look at. And we regularly drilled so we knew how to be able to respond in the case of a crisis. But COVID-19 wouldn't have really, I don't believe, people would have looked to that level to have contingency plans for that. And we think about it, I think if you look at that, the pipelines, as I mentioned earlier, are capital intensive, but we're not very people intensive. So our people are spread out, and generally they're going to be in areas where they're not interacting with a lot of other people during the work time, except in the control room. So I think in the control room, that is going to be the biggest place where people come in, go out, back to their families, come back in. So we have a melting pot there, which needs to be considered, and the plans need to be taken in order to protect those people. Most of the business people can probably either have very small staffs that need to be there or a lot of people working from home. So yes, on the crisis management plan, definitely well-trained, ready to respond, but this is pretty unusual, and particularly trying to figure out how to protect people is going to be the tough thing, I believe, in this case. What will energy pipeline operators do to protect supply? So that's really not, my view, the job of the pipeline company. The job of the pipeline company is moving units from point A to point B. Now, on the gas side of the business, from a supply standpoint, we are just coming out of the winter. So we're just coming out of the winter, gas storage, and gas consumption is very seasonal. Gas storage is getting down to a point where it's going to be pretty empty. So I think from a gas standpoint and a storage standpoint, we will be fine for quite a period of time. Now, oil, on the other hand, I have been seeing reports that said oil tanks are very full, and so it's getting to be hard to find places to put the oil. But just having demand fall off and then come back again, I don't see really as a big supply problem, because the supply, I think, is going to be there. So if you look at supply, walking back the value chain, let's take oil first. On the oil side, the refineries need the supply of crude oil so they can process it. Well, the refineries, I believe, are slowing down now because overall demand for refined products has dropped off. Overall demand for natural gas liquids has also dropped off as manufacturing has dropped off. I believe that the demand for natural gas is dropping off too, as people are staying in their houses and that sort of thing. So don't really see the pipeline operator's job is to protect supply. It's to move it from point A to point B. And remember, I'm talking about this from a U.S. standpoint. So some places in Europe have mandatory stocks and that sort of thing. So this question asks about the profitability of pipeline companies, particularly gas transmission companies, in light of lower demand. And I think that's a very legitimate question. I talked earlier about how pipelines make money. And so I believe what's going to happen is that there will be a reduction in the earnings across the board for pipeline companies. Now, probably the ones that are the long-haul transmission companies may have the least impact from the oil side of the business. The COVID-19, of course, as I mentioned earlier, is affecting the demand for natural gas and refined products. So definitely we'll see a lowering, and then we have to talk about, is there some, in cases where there's regulation, is there some regulatory response that the regulator needs to assist with in coming back to the pipeline companies. Now, if we look at the U.S., one of the major ways we set pipeline rates is through cost of service, particularly on the gas side of the business. But that's done looking a bit in the rearview mirror. So it's possible that we may be seeing gas transmission companies in the U.S. and maybe other places too, where they regulate at a cost of service, coming back and asking for price increases going forward. Big concern, though, is making sure that we continue with the profitability. This question really sort of goes back to the previous one, talking about suspending some maintenance, particularly non-essential maintenance, in light, presumably, of lower profitability. And so that's going to happen. But let me go back now and split maintenance into two things: maintenance and integrity. And so we have a tendency to lump those together, but I want to take them apart. To me, maintenance in the pipeline industry is things like taking care of pumps and motors and valves and meters and all that sort of stuff. And all of those things are done the same way in the pipeline business anywhere else. Integrity, on the other hand, has to do with the soundness of the pipe running through the ground that goes across other people's properties. And so we can defer maintenance for some period of time without causing any problems in terms of breakdowns and that sort of thing. As I mentioned before, pipelines are very capital intensive, so we do need to take care of things, but generally we can put some maintenance off. So I think if this is a short-term phenomena, then that won't be a problem. If it's longer term, that can get to be a problem again from a profitability standpoint. And if we look back to what happened 2014, when we also had a drop in energy, we saw a lot of pipeline companies scrambling because their customers were changing. But the pipeline companies, we saw a drop in the price of fuel, but we didn't see a drop in demand. So the pipeline companies, particularly the gatherers and processors that were the closest to the people who were producing the oil and gas, felt the consequences the most, because people were putting off plans. They were changing their production plans, changing their development plans, and companies that had agreements suddenly were seeing those agreements vacated, or if they were counting on a particular area to fill out and it didn't. Generally speaking, sort of 2014, 2015 The longer haul pipeline companies seem to continue to do okay, except for those that were built primarily to transport from producing regions to refineries or to market centers. So from a planned maintenance standpoint or deferring maintenance standpoint, I think that definitely we'll see some of that. I believe that that's going to come back again whenever we get the demand recovering. If the demand doesn't recover, again, we may need to go back and look at some ways to raise the rates that are charged and that sort of thing to be able to maintain the profitability of a critical infrastructure. This last question sort of follows on the previous couple questions, not surprisingly, I guess, and talking about we're seeing majors like Shell in this case have cut their plans for expenditures. Of course, this is going to turn around in the future, but then the question is, what changes do we see coming out of all of this? Well, I don't have a very good crystal ball on that. Whenever I look at what might happen to plans, I generally tend to do a base case, a worst case, and a best case. So I think in this situation, if we think about those three, once we have gotten over if we will, or learned how to manage the coronavirus, it's possible that things are going to pick right back up to what they were. I think that's probably best case. We return to basically normal before it all happened. Now, there's going to be a lot of pain on the producer side. Some of that's going to transition into the service provider side and to the gathered reseller side. I don't see too much of that going into long haul transmission and trunk lines that have been around for a long period of time. Now, new lines that were built to serve the supply, like coming from the Permian Basin in the U.S. down to the Gulf Coast for export, those pipelines might have problems because their shippers are having problems. Worst case is going to be, I think COVID-19 has changed everything, possibly for the good when it comes to the world. More people learning how to work from home, more people learning how to do things without traveling, more people learning the importance of family and all of those sorts of things. So I think that's good, but it's not going to be good for the pipeline companies, in fact, for a lot of the transportation companies, because less people may be moving. So that's kind of a worst case, and then we have it kind of midway in between there. We can look back to what happened in 2014 to kind of draw some lessons from that. One of the things that will certainly be happening and happened in 2014 and 2015, the producers, the crude oil producers, were driving suppliers and vendors to try new technology that they might have thought was too big of a risk previously, but now they did it. Longer laterals, for example, and those sorts of things, which increased our production from individual wells, learning to drill from a number of wells from a pad, drilling them longer, significantly reduced the cost of producing oil. So we may see some of that happen again, but we're sure down at a low rate here. So very hard to tell what's going to happen, and have to be nimble and be responsive to it. So I hope those 6 questions have given you some food for thought anyway. Again, this is just my perspective based on about 40 years in the industry. And certainly we are looking forward to some really interesting times as we go forward. Thank you for listening. This final slide says questions or comments. Obviously, you can't ask any questions or make any comments right now because you're not here when I'm recording this, but feel free to contact me at tom@pipelineknowledge.com. And incidentally, that's my website as well, pipelineknowledge.com.